All right, guys, good afternoon. Welcome aboard to the aftermarket recap for the week. My name is Carlos Garcia, founder and CEO of GAR Capital. Thank you so much for taking the time out of your day to not join me only for the morning note, but also for this recap of the week. We're going to go over the market and what we see. I had to bring my glasses in because I've been staring at the monitor all day, and I actually had to go get my glasses out of the car. So good idea that I did, because sometimes I can barely see the candles. So here we are. Please don't make fun of my glasses. Kidding. Anyways, let's go ahead and go over the day. Dow Jones closed down 336 points. Nasdaq fell 1.69%. The S&P 500 fell 1% as well, 39.70 on the spot. VIX closed up 2.5% at 2167. Equal weight S&P down 0.86%, 146.85. Small caps fared a little better than the broader market, 187.51, down 0.94%. The dollar did break that 105 level that we talked about, up 0.60%, closed at 105.22, 3.949, right below that 4% level for the US 10-year as yields were higher. Remember, bonds were up yesterday. TLT down 1.3%, high yield credit down about 0.6%, and investment grade credit down about 0.75. Crude oil did bounce today, 76.52 a barrel, up 1.5%. With gasoline futures at $2.58 a gallon, pretty much flat on the day. Gold futures, even with the market being down because the dollar was higher, 18.18 an ounce, down 0.47%. Same for the silver futures; they were down 20.86, down 2.7%. Copper futures broke the $4 barrier, $3.96, down 2.37%. You can thank the dollar for that. Going into Forex, euro dollar fell 45 pips, 105.48, 136.42, up 171 pips for the dollar yen. 119.43, down 71 pips for the pound dollar. Bitcoin futures 23,320, closed 3.5%. Ethereum futures 2.92% to the downside, 16.14 each contract. Okay, let's go over the day, shall we? Let's go ahead and start with, you know what we'll do, since we played SPY puts, we'll keep SPY here. And basically what we got, obviously with the PCE numbers being a little higher than expected, PCE is the Personal Consumption Index. So again, that is personal consumption expenditures, meaning what customers pay, just like CPI, but again, it includes more things that are housing related, like rent and mortgage, obviously. So again, that came a little higher than expected, brought stocks down. Remember, we talked about how we were short on SPY. We were a little further out of the money than we would like. We didn't get the nice gap down, but we continued to rally further down. And we were targeting that 200-day moving average. We broke below that 50-day. We talked about that yesterday, how that twice is a possible an occurrence, but 3 times is a trend. We finally broke that 50. We came near the 200. We did not get there, but we bounced right on the trend line. So again, that was kind of the zone we were looking for, meaning with seasonality. So none of this is really new. The only thing I expected today was for us to bounce above the 50-day. We didn't get there, which is fine. I mean, at this point, I don't think any bear would be upset that we stayed below the 50-day. And any bull right now isn't exactly looking at this saying that it's juicy just yet. Obviously, I'm expecting us to bounce from this trend line towards March, the beginning of the new month, but I still expect February to be weak because of seasonality. That should get us to around 393 and retest that 200-day moving average. So again, the weakness might not be done until later on this next week coming up. So I just want to pivot with that into what we're going to talk about in terms of next week's economic data. Let's go and bring that up here. All right. I'm going to go to next week. We're going to go apply settings. This is Forex Factory. In terms of what's coming up, pending home sales will be at 10 a.m. on Monday. We'll keep an eye on that. More FOMC speakers, nothing new. On Tuesday, nothing really special that we need to watch on. CB, consumer confidence, I'm not really focused on that. ISM, manufacturing PMI. Again, we know that services PMI is expanding, yet manufacturing is still in a contraction area, which seems to be deflationary. Well, we don't. Again, it's all about services and of the like. That's keeping inflation pretty much where it is now, and not falling a little faster. Crude oil inventories, of course, we know that comes in every Wednesday at 10:30. We'll see if we continue that build. Unemployment claims, we'll get that next Thursday as usual. And of course, Friday, we have ISM services PMI. We'll see if we're still in expansion territory, anything above the 50 reading. If you noticed, next week, next Friday is the first Friday of the month. But since February was a short month, there is no NFP next week. So keep that in the back of your mind too, that we're not expecting a ton of action next week either. We just had a short week ourselves. Remember, we had President's Day on Monday, so we were basically trading on a four-day time window if you're playing same week trades or expiries. But in terms of next week, again, I think you're still going to stick with the technicals and the seasonality and the flow, regardless of what the fundamentals are saying right now. It is still a trader's market until really further notice, until we break 4,200, because that'll be a bull market to the upside for the S&P. But we are not there yet, but we can wait until we do. So with that being said, let's go over the week that we had. Pretty short week, obviously 4 days. Being the only loser that we had this week was the Apple play. The Apple trade, we had calls. The New York Post headline came in saying that they were laying off some contractors last week. That really hurt the premiums. We're trying to see if we get a little bit of a bounce on Tuesday from the bearish sentiment. We did a little bit, so we got to salvage something. Not exactly to be too excited from. Netflix, I mean, I wish I held that runner. Really soared, so that was nice. Google, the most I saw on the runner was 60%. We had the SPY puts. Granted, yesterday we were down as much as 71, but again, a little too far of the money. If we would have got the 395 puts, that would have been possibly $2.30. That would have been a little bit of a better investment. We probably would have made a little more. 30% is nothing to be too bad about. I closed the runner right when we hit that trend line, as I explained on the market blog on Discord. So again, a pretty mixed week in terms of, I think it was a great week, obviously a profitable one. Apple being the only thing that hurt us, and that was really much of a carryover from last month. In terms of the month so far, Russell, I mean, what can you do, man? That Russell reversed on us. And again, the first things I see personally, I always look at what I did wrong because I want to improve on those things. Yes, when you do good trades, it's like, congratulations, that's great. But again, I want to always improve as best as we can. So again, a pretty good month so far. We only got 2 more days left in the month. So again, we don't want to give anything away. To me, this week was a difficult one to trade because even the puts took a little bit of time to really come to fruition when we get that momentum down. This market makes it difficult to short. I hate to say that because, you know, I would honestly would like things to be on an equal footing in terms of momentum, but there is just not that momentum to the downside where puts are getting in demand. And again, we always want to buy something that we can sell immediately. So again, in terms of next week, don't expect too much. Personally, as we're getting into the end of the month, I would expect a little more bearish action, at least to retest that 200-day. We'll see if we can bounce from there or at least create a base. And again, that's what we want in a bull market. We want structured rises with tests of support and bouncing in that and a trajectory that's upward. We don't want green shoots straight up. That's the last thing we want because those get faded and sold off. And we don't want more volatility. Well, we kind of do want volatility, but we kind of don't. Either way. All right, guys, we'll leave it there. Have a great rest of your week. This is considered the newsletter for the week. I find it a little easier just to talk to you guys about the market. And we're going to have a podcast coming in soon. So we'll let you guys know on Instagram when that podcast is out. Have a great rest of your week. Enjoy your weekend. And we'll see you guys on Monday, bright and early for the morning note. Have a great one, guys.